China has been the saving grace for the global economy with year after year of positive growth. So today we will discuss, can China's bull market continue? You came here for the truth, so let me unveil that for you. I want to get into the charts that I have, also a diagram, and some information that would suggest that while the stock market in China has been increasing, the economy is falling. Let's begin with this, in fact, showing you the US, just as an example, the history of the US government debt, unprecedented peacetime levels. This information is out of the CBO, or the Congressional Budget Office, and what we are seeing here is the US federal debt held by the public. They show you, for those who can't read this text, 1790. It dates back to all the way beyond the current day into the future, projected future of 2030. And what we are seeing here is a situation that the debt hasn't been this bad since World War II and the Great Depression. Normally, during the times of war, we have countries that basically print their way and use deficit spending in order to fund these schemes. But today, even though the wars that they are in do add up to a considerable amount of money, that isn't why they are in all of this debt. There is much more going on today, particularly since the 1970s, but it has been exacerbated throughout the past few years since the financial crisis. So let's begin with this. China, we're looking at China said to consider PBOC lending tool to help local debt. If you read the mainstream media, they will suggest that there is no QE going on in China right now. In my previous videos, I have talked about the fact that China has in fact relaxed their lending practices, and this is what happens throughout these times of desperation. China's central bank is considering expanding a new lending tool in an effort to bolster demand for local government bonds. As policymakers seek to develop a municipal debt market and avoid a credit crunch. What are they saying? Well, we need to figure out a way to get money into places where it isn't naturally going. The PBOC last year channeled 1 trillion yuan through the PSL facility, that's the Pledged Supplementary Lending Program, facility to China Development Bank for redevelopment of shanty towns. This is a limited occurrence here, but this does show you that yes, in fact, they printed up some money and they sent it into a specific direction. This is no different than QE. You can call it PSL, you can call it QE, call it whatever you want. I call it money printing, even though at this point it's all digital. It's just a way to represent the fact that money is going from the central bank and into the hands of whoever it might be. In this case, these redevelopment of shanty towns in the US, they'd like to give it to the bankers so they can go on expensive vacations and buy their latest mansions. Let's move on to this article or this chart here where we're looking at China's slowdown. The dark blue line is the rail freight volumes and the white line is the electricity production, both declining considerably since the financial crisis. In fact, other than these little ups and downs that we've had, it's basically moved in a straight line downward. We're looking at a very big problem, in fact, and we can use this, the rail freight volume in particular, which corresponds with something like the Baltic Dry Index, which is showing a decline. Now, before I get into any more detail, I just want to say that yes, in fact, China might be growing. While they said that their GDP is at, let's say, 7% growth, for example, but others calculate it at 3 to 4%. It doesn't matter. All I'm trying to tell you is that it is worse than what they say. I'm not going to look at the stock market and realize that this is a possible projection of what's happening in the economy. The stock market is completely disconnected. Those who are subscribers on here know that information for sure. I want to move on quickly. China's credit boom, private non-financial sector debt as a percentage of the GDP. Look at these numbers going up in a straight line, and really it got extremely bad since the financial crisis. This is a repeating theme that I find myself saying practically in every video, because ever since the financial crisis, they needed to figure out a way to get everything to come back up. Well, they certainly did that. However, it isn't really something that has been fixed. Look at this chart beginning in 1992 up to present day, and we are seeing nothing but an increase in debt, and that is every single sector. Let's move into this article here where the IMF talks about China's yuan currency, quote, no longer undervalued. For a considerable amount of time, it wasn't just the IMF, but the US and others said that China was purposely keeping their money undervalued so that it would be more attractive for exports. This is something that countries have been doing for quite some time. It is a currency war, and I do believe that this is going on today. And now they're saying, no, that's not happening anymore. Don't worry about it. China's yuan currency, which Washington has long alleged was manipulated, is no longer undervalued according to the IMF. Basically what I have just said. Our assessment now is that the substantial real effective appreciation over the past year has brought the exchange rate to a level that is no longer undervalued. So nothing really has changed globally, but all of a sudden it's no longer undervalued. I don't know what's going on behind the scenes here, but something is fishy. What we have is these currency wars that are taking place every single day. We need to realize that everything that they tell us in the mainstream media is false. So what's happening here? I'm going to keep a closer eye on it. I hope you do as well. What is going on with China is that they are able to export their products at a very cheap price, mind you. This diagram is from my book, One of Many. What we have is, and I'm just showing US and China because that's the chapter, US and China's relationship, but this goes with basically the developing world and the West. So what they have is this exchange of things where China gives real goods to the US, but the US then gives these IOUs, which they call bonds, to China. Now what happens if that nation ever defaults? Well, in fact, they're not going to get paid back on their money. That's pretty obvious. This is something that we need to realize what could happen in the future, not necessarily with the US, but with other nations. And then we could have a snowball effect. These creditors, people who are giving out these IOUs, now think about it like this, where a country like Greece has been selling its IOUs, its bonds, to different countries around the world. What if they default? Are they going to be paid back? Are certain people going to be paid back? How is it all going to work? You need to realize that this is very serious information. Let's look at this with China's total credit continues to grow. This is a percentage of the GDP where we can see first of all, the green area. This is the measure of total credit, gone up considerably since 2002. We are seeing a rise no different than what we have seen in the US, and the percentage of GDP also increasing as well. The debt is expanding not just in China but all around the world. We are just noting the fact that it is occurring in China specifically because China is often seen as, look, nothing bad is going to happen here. Growth is perpetual. And personally, I've heard this all before, but it cannot be sustained forever. Then we begin to look at this China required deposit reserve ratio for major banks. This is out of the Telegraph, and what we are seeing now is a decline that we haven't seen since the financial crisis. So think about that, where we have a reserve requirement. Just to get into it very briefly, although I discuss it in detail in my book. For those who don't know, the reserve requirement is simply the amount of money that the banks need to keep in order to have their fractional reserve banking scheme take place. So it might be only 2 or 3 or 5%, depending on the country, depending on the economic situation. Here in China, there seems to be an issue because they haven't had it this bad. In fact, it's even worse, more of a decline now than was during the financial crisis. They are very, very concerned about what's happening. Let's move on to this last article. A little bit of a different spin here. China's naval abilities test Asia's insecurities. For those who haven't been watching, what we have is these artificial islands that have been built in these disputed waters in Asia, where we have China building essentially a military bases on these islands. And the surrounding area and also the US is in fact not really taking this very seriously. They don't believe that this land, this newly built land, is in fact belonging to China, and this is very serious because both sides have disputed this, and they have been definitely engaging in some saber rattling. China's promised to beef up its navy to prevent further meddling, and provocative actions by rivals in the South China Sea is daunting prospect for many of its neighbors, which already view Beijing's fast improving armed forces with trepidation. Then you can go on and read the article for yourself if you'd like. You can see this information on other websites, of course. And what we have is a dispute that is taking place. There is the threat, or the consistent threat, of this hot war that is going on, not with China and the US necessarily, but with Russia. We've seen what happened with the Ukraine. We have seen all these wars in the Middle East, and essentially all of this is expanding. But we also have the cyber wars. We have the currency wars that are taking place. Everything is really heating up, and this is all going on in order to distract us from what's happening with the economy as they go out and steal our wealth. This is happening before our very eyes, and I intend to keep my eyes on it. If you found this video informative, please give me a thumbs up. I really appreciate that very much. I'd like to mention that officially the Money GPS Insiders is no more for the time being. I did shut it down just now, so unfortunately I had to do that. Once again, I'll just mention for the last time that due to financial reasons, I had to shut that down. Although I do really appreciate all of the really nice emails that I've received through there, the kind words, and how many people were benefiting from that. I'll bring out more information in that in the future. If you found this video informative, I know that you will find my book, The Money GPS, even more informative. You can actually look through the book. If you go over to Amazon, they have a look inside feature, and you can flip through the book and see if you like it for yourself. Take care.